Hello and welcome back to The Note. The US-China relationship has been a great issue ever since Nixon went to visit Chairman Mao more than 4 decades ago, and it continues to be very important. Obviously, many people think that the global imbalance between the US, the great debtor, and China, the great creditor, had much to do with the financial crisis that broke out in 2008. Now we're at a stage where, according to Larry Summers, the US faces secular stagnation, while the Chinese leadership says that it's embarked on a big reform program. Where have we reached? With me now to discuss this is the director of Fathom Consulting here in London, Danny Gabay. Danny, thanks very much for joining me today. Let's start on the US side of the equation. Many people say that this has been a jobless recovery, but your take on that might be slightly different. What we're looking at here is the recovery in private as compared to government employment since the worst point.
It is true that overall US employment has recovered much more slowly than the past, although every recovery is from living memory starts half-life as jobless recovery.
Right.
But it's certainly not true if you just look at the private sector performance. Private sector employment is 6 percentage points above the peak it reached. The only reason total employment is weak is because of the job cuts in state, local and federal public jobs have been lost steadily since 2010.
Okay, so this is an unusual situation where we've attempted austerity coming out of a recession rather than the more normal Keynesian spending. Let's take a look. We have non-farm payrolls coming up later on. This is the latest initial claims data, which suggests that we're pretty much back where we were. We've smoothed this by taking a 4-week average. Is the situation as strong as the claims data makes it look?
I think the claims data are very important, and going back to the previous chart, the point is, had government jobs stayed the same, then this recovery would have looked exactly like the average of every recovery since the Second World War. The claims data, and these are initial claims, are particularly important because they're showing that the number of new people coming onto the unemployment benefit roll has dropped dramatically and is almost back to where it was at the peak of the boom.
Right.
So there is some logic to the idea that something's different about the US economy in terms of the labour market, in that the duration of unemployment has been longer than normal.
Right.
And people have dropped off, the unemployment benefit falls off, so continuing claims have been lower, but these are initial claims, so these are new people being laid off, and that has dramatically fallen, as the chart shows, from 2009, a peak of nearly 700,000 to around half that number now.
Okay, now we're about to move on to China, but very quickly, do you have any kind of a forecast for non-farm payrolls for December?
I'm glad you asked, John. Yes, we do. Our forecast is quite robust. We're looking for 225,000, which is based on our analysis of the claims data and the ADP report, and our understanding that there's some levelling off in layoffs in the public sector. So we're looking for a strong number. The point of all this analysis of the labour market is that we do not agree with Larry Summers.
Right, exactly.
If anywhere faces secular stagnation, it might be said that Europe runs the risk, including the UK, but it's very hard for us to understand why that would be the case in the US.
Okay, let's cross the world to China very quickly. We're in this fascinating situation where China has been catching up for a long time. We've got very long-term data here. The question is obviously, can you carry on that sort of hockey stick shaped development for much longer?
Right, so development economics, that people often talk about a hockey stick, and it's hard to think of to find a more obvious example of that than this.
Right.
Basically, China didn't go anywhere according to the long-term database in terms of its living standards for the best part of a millennium, and has suddenly leapt forward in much the way that the West did following the Industrial Revolution. Our argument is now not so much about whether the trajectory can continue, but what would be required for China to defeat the middle-income trap, where most other developing economies have got to this stage, to this level of catch-up, and then stagnated.
And just to that point, if we take a look at your final chart, these are Fathom estimates, there is a looming risk of a very serious output gap, as I see it from this chart, right?
Right, so our argument about China is quite simple. The one thing we're fairly certain about is that the consensus view, the official view, which is of a gradual slowdown, is wrong. It's either going to be much better, which is that China does go way beyond catching up. It pushes beyond the technological frontier and what we've called the second rise. It increases, in technical terms, its total factor productivity performance. And productivity is the only way to sustain this catch-up. Or it's going to be much worse. And much worse is because of the balance of growth in China has been so heavily tilted towards supply, i.e. investment, that either Chinese consumption needs to accelerate dramatically to absorb all the capacity they have, or the West has to absorb it for them. And we don't think the West will do that.
Right.
We don't agree with Larry Summers, but we don't think there's enough to absorb the amount of potential growth that China has. We estimate, in the work we've done for China, that this gap between potential and actual means that if Chinese demand is going to plug the hole in demand, it's going to have to increase per head something like 7-fold over the next decade.
7-fold?
Right. We need to see consumption in China growing well above GDP for quarter after quarter, year after year, for decades.
That sounds like quite a bearish, worrying prognosis on the face of it. I mean, do we see at least some form of a correction of the famous global imbalances if China does fall short of that level of consumption?
Well, the answer, the optimistic side, is that the third plenum reforms are real. They relax and make the RMB fully convertible, or yuan fully convertible, and that this leads to a substantial increase in Chinese consumption as a share of GDP and beyond as a share of GDP. And that will become a virtuous circle. A higher exchange rate, a stronger exchange rate, puts more purchasing power into the consumer's hands. It allows the authorities to cut domestic rates. It will also contain inflation and will result in a much more balanced growth profile, which will then provide the demand for the West to export our way out of the problems that we're in, thereby ending any discussion of secular stagnation.
Okay, Danny, thank you very much indeed. That was a very ambitious thesis that we've tried to get across to you in the last few minutes. But I think the bottom line is that while there are still plenty of things that could go wrong, you can see a route in which the world could steadily bring itself back into balance.